Today, we're uncovering 5 hidden penny stocks under $5 that Wall Street analysts think could explode. No filler, just earnings, targets, and why these are under the radar right now. Stick with me, by the end, you'll know which ones to watch. Smash the like button for latest penny stocks picks every day without wasting time. My target is 500 likes on this video and we're almost at the 1000 subscriber milestone. You can help me get there with just one click. So subscribe now. Today, we'll dive into market momentum, analyst targets, and upcoming catalysts. The final pick might just be the biggest sleeper on your radar. Our first stock is Beyond Air, NASDAQ, XR. Beyond Air makes a medical device called LungFit PH, which delivers nitric oxide, NO, therapy without bulky gas tanks, making it easier for hospitals to use. In fiscal 2025, the company's revenue jumped by 220% to $3.7 million, up from just $1.2 million the year before. They forecast even stronger growth next year, expecting $12 to $16 million in revenue for FY 2026. They also submitted an FDA update, PMA supplement, for a next-generation device and expanded into international markets, including Europe, Australia, and the Middle East, now reaching over 2 billion people. However, it's not all smooth sailing. The company reported a net loss of about $46.6 million and had just $6.9 million in cash against a $38 million annual burn rate, meaning they may need more funding soon. That's a risk to watch. Analyst interest is rising, with many seeing potential for big upside if sales continue growing and they secure funding, but the path to profitability is still uncertain. In short, Beyond Air is a small medical tech player with rapid revenue growth and global expansion, but also with tight cash and high risk ahead. Whether to sell or hold depends on your comfort level with early stage, high risk, high reward stocks. Our second stock is Blade Air Mobility, NASDAQ, BLDE. Blade offers urban air travel, like helicopter rides from Manhattan to the Hamptons, and is also one of the largest organ transporters in the US. In Q2 2025, the company reported $70.8 million in revenue, beating estimates of $64 million. This growth came largely from a 17.6% increase in its medical services segment, while expenses dropped, improving its adjusted EBITDA by $2.2 million to $3.2 million. They also made a big strategic move, selling their passenger division to Joby Aviation for up to $125 million and refocusing entirely on their medical logistics business, now branded Strata Critical Medical. They ended the quarter with no debt and $113 million in cash, giving them a solid balance sheet. Analysts have mixed views. The revenue beat was a positive, but earnings per share missed slightly. Still, some see potential upside between about $5 and $13.50 if the medical business scales successfully. In short, Blade is transforming into a leaner, stronger business centered on medical transport with clean finances. If the pivot works, it could deliver solid upside with less risk than before. Our third stock is Ultrapar Participações S.A., NYSE, UGP. Ultrapar is a Brazil-based energy company operating in fuel distribution, chemical production, and liquid bulk storage, essentially one of the key suppliers keeping Brazil's transportation and industrial sectors running. In Q2 2025, Ultrapar posted net revenue of $6.3 billion, up about 6% from last year. The fuel distribution segment, its largest business, benefited from strong fuel demand in Brazil, while its chemical unit, Oxiteno, enjoyed improved margins thanks to stable raw material prices. Net income was roughly $105 million, a 15% year-over-year increase driven by better cost control and efficiency improvements. Debt levels also fell slightly, strengthening the balance sheet. This is an important advantage in a competitive and regulated market. The company recently announced investments to expand its fuel station network, upgrade storage facilities, and boost its biofuels focus in line with Brazil's clean energy goals. Analysts generally have a positive outlook, citing steady cash flow, a strong brand presence in Brazil, and the country's growing energy needs. Price targets range from $4.50 to $7, suggesting moderate upside potential. In short, Ultrapar is a stable, dividend-paying energy company with steady growth. While it's not a flashy stock, it offers dependable performance and may appeal to investors seeking consistent returns. Our fourth stock is OS Therapies Incorporated, NASDAQ, OSTX. OS Therapies is a biotech firm developing treatments for rare cancers and bone-related diseases, including osteosarcoma, a cancer that often affects children and young adults. In Q2 2025, the company reported a net loss of about $3.5 million, typical for a clinical-stage biotech still in heavy R&D mode. While it has no commercial revenue yet, OS Therapies holds about $18 million in cash, enough to operate into mid-2026 without raising additional funds. The biggest recent news is progress on OST-HER2, its immunotherapy for osteosarcoma, which is in phase 2 trials. Early results showed promising survival rates compared to standard treatments, attracting attention from cancer research groups and creating the possibility of FDA fast-track status. The company is also developing a second program focused on bone health in cancer patients, aiming to prevent fractures during chemotherapy, a move that could broaden its market potential. Analysts remain cautiously optimistic. Some see the potential for major upside, possibly several times its current value, if trials succeed and partnerships with larger pharmaceutical companies are secured. However, trial failures could lead to steep losses. In short, OS Therapies is a high-risk, high-reward biotech targeting rare and underserved diseases. Success could bring breakthroughs, and significant rewards, for early investors. Our fifth stock is LifeWard Limited, NASDAQ, LFWD. LifeWard develops wearable exoskeletons and mobility devices for people with spinal cord injuries, strokes, and other mobility challenges. Its flagship products, like the ReWalk Personal Exoskeleton and Restore Soft Exosuit, help patients regain mobility after serious injuries. In Q2 2025, LifeWard reported $4.1 million in revenue, up about 40% year-over-year, driven by higher sales in both the US and Europe. This growth was aided by expanded insurance reimbursement approvals for its devices. Gross margins improved to 53%, up from 48% last year, as manufacturing became more efficient. The net loss was $2.8 million, still negative but trending smaller compared to prior years. LifeWard closed the quarter with $20 million in cash and no long-term debt. The company also partnered with major rehabilitation centers in the US, Germany, and Japan to expand clinical adoption of its products. Analysts like LifeWard's niche in the fast-growing medical robotics market, which is expected to be worth billions over the next decade. Price targets range from $7 to $12, suggesting strong upside potential if adoption keeps growing. In short, LifeWard is an innovative medical tech player with rising sales, improving margins, and a growing market. While still unprofitable, its momentum makes it worth watching. And there you have it, 5 stocks under $5 that analysts believe have serious upside potential. From energy and fast food to biotech and cutting-edge medical technology, these companies are showing strong financials, exciting developments, and real momentum going into the next quarters. Remember, the stock market can move fast, so doing your own research is key before making any investment decisions. If you enjoyed this breakdown and want more straightforward, no-fluff analysis like this, make sure to hit that subscribe button and turn on the notification bell so you don't miss our next video. Let's aim for 500 likes on this one. Your support really helps push the channel forward and tells me you want more daily updates on high-potential stocks. And hey, I want to hear from you. Which one of these stocks do you think has the biggest growth potential? Drop your pick in the comments, and I'll reply to as many as I can. Until next time, keep learning, keep investing, and I'll see you in the next one.